All right, team. Lots of things going on today. Lots of things going on. Remember last week when the Federal Reserve warned of an impending potential possible stock market crash? Remember that? Turns out that's the one thing they've gotten right. But they have no clue about inflation. I'm going to show you some stuff today that's going to boggle your minds. I know I've been talking about inflation for a while, that it's coming, that they're lying, or that they're ignorant, one of the two, and that we're going to have to face this here at some point. And that time is now. So we're going to look at a bunch of different things here today. And we're going to talk about what the next move is. So mortgage bonds here. We'll go through mortgage rates real quick. You can see the last 3 days are plummeting. This is not good. When bond prices go down, mortgage rates go up. So we had this nice run here, where we saw higher bond prices. This is rates going down. And we've given a lot of that back here in just 3 days. And the ugly inflation cat is out of the bag officially. Not because Warren Buffett said so. Not because Janet Yellen said we might need to raise rates. But because we got a reading today. Get this. We got a reading today on year-over-year inflation, which to be expected. Remember, now we're year-over-year comparing to Corona, so we do have to keep that in mind, but it's not changing the way the market is perceiving this. And so sometimes those things that are technically accurate matter, and sometimes they don't, and in this case, they don't. Worst inflation reading we got since, get this, since September 2008. A year we'd like to forget. 2008 was like the first 2020, except for it wasn't COVID. It was system-wide capitulation and wealth destruction. And, the Federal Reserve warned, and I made a video about it. It's why I'm doing this stuff. Okay, I already know these things, obviously. I'm just trying to share it. A lot of people who follow me in real estate and clients and people who are buying homes with me and things like that, they want to know what's going on. This is essentially my way of trying to keep everybody abreast of what I know, at least. So yesterday we were down over 500 points in the Dow. Today almost 700 points down. The NASDAQ's been getting absolutely crushed. VIX is climbing. What's one thing that's working? Do I need to tell you, or do you remember? Have you been watching? Oil, as my grandpa would say. Oil. That's right. OIL, oil. That's going to go up relentlessly. Doesn't matter. Especially if the economy upticks from, getting back out of, getting reopened, if you will. You're seeing a lot of things. There's some gas issues. There's a pipeline hack. There's a couple things that are adding fuel to this fire. Don't get me wrong. But let's take a look at just some of the top stories here through super bias, completely paid for media site CNBC. And it's good to know, the bias of the place where you're getting your information. Today, this is Patty Dom, supposedly market insider. She said inflation spooks stocks and raises fear the Fed is wrong, that the price spike is temporary. Fear the Fed is wrong and the price spike is temporary. Well, no shit. If you didn't know that the Fed was withholding information or was inaccurate with the information they were providing, or they were allowing the numbers to speak a certain narrative that we all know and should be able to see with our wide open eyes. I can take my glasses off and I can see there's inflation here. If you guys can't see that, then this whole site is worthless and the whole Federal Reserve is worthless. If you can't see something like this coming, you can't proactively create a solution, you're all worthless. You're doing no help to anyone. So fear that the Fed is wrong and the price spike is not temporary. And they should be, because the Fed is wrong and the price spike is not temporary. So now you have this narrative coming in to play, which coincides with the sell-off, so it all makes sense, right? Now, the markets should have known. The Fed should have known. We're comparing a year-over-year number to a Corona month. Remember May last year, we were in the heat of Corona. There's still a lot of unknowns. There's some crazy stuff going on. We had a presidential election 6 months from that. There was a lot of things going on. So this should be no surprise. Inflation speeds up in April as consumer prices leap 4.2%, fastest since 2008, September 2008. In fact, oh, there they go. They put it in there. The expectations were much less, even considering the year-over-year with Corona. That's the problem. The expectations were lower. Inflation comes in higher. No bueno. No bueno. Remember, Warren Buffett also sent us a warning shot on this. Prices are going up. Here's what inflation means to you. I highly suggest you watch. So I'm going to post this link Check this out. Rick Santelli is a straight shooter, and he's a bond guy. He's a bond guy. Now, inflation is terrible for bonds, hence what the action that we're seeing over here in the mortgage bond territory, which mortgage rates have gone up the last 3 days straight. And it's been close to 0.25% that you're seeing here. And this is the Fannie Mae bond. I could show you a bunch of other bonds too, but take my word for it. They're all getting sold, and they deserve to be sold. Who in the world would want to buy a bond right now? I can't imagine. So I would definitely check out this video. Just hear what Rick Santelli has to say about this. And also, this is actually a decent article with some information about it. Because a lot of people have been asking me, like, what is inflation? What does this mean? Does this mean, in fact, I just had a client ask me, so inflation, that means that home prices are going to go down. No, no, no. Home prices will go higher. In fact, we can all now see that home values in real estate across the country, this is not just in booming areas like San Diego. This is happening literally everywhere. Montana, Idaho, Iowa, Kansas, Missouri. It doesn't matter where you're looking for real estate. Real estate prices are going higher. Why is that? Because real estate is a leading indicator, meaning that you're going to see it happen there first when it comes to inflation, and you're going to see it reflected in the prices. That's exactly what we've seen. So we've been seeing this for a while, though. So the rest of the economy and all the bow tie guys and all the economists and everyone who's going to do all the analysis on the numbers, they're going to say, oh, the inflation is finally here. No, the numbers are representative of previous quarters, of year-over-year comparisons. It's been here. It's been here. And I expect now real estate values to continue to go higher. It might get out of you think it's out of control right now? Well, just wait. Just wait. Now, I do believe we'll see it cool off a little bit because there's a little buyer exhaustion. There's a little sort of like, oh man, this has been such a tough move. And with things reopening, I think that will slow things down a little bit in real estate. But that will be an opportunity for buyers to take advantage of. That will be an opportunity for buyers to jump in and maybe have less competition and get into a house where you might not have been able to previously. So if you see it slow down the market a little bit, take advantage of it. Pull the trigger. Trust me on this. Trust me on this. Pull the trigger when you see those opportunities. Do not buy into the fear when it comes to real estate, right? Real estate is the safest place to be. It is the most sure bet in an inflationary circumstance. And this in particular inflationary circumstance is wild and crazy. Wild and crazy hyperinflation. And unfortunately, the Federal Reserve is turning a blind eye. The administration has no idea what to do. And basically, we're all just on this, we're in this train that's accelerating. We have no brakes. We have no idea where it's going. That's what's going on. The only thing we know is the safety blanket that we could possibly have is real estate. So keep that in mind. Inflation does not make real estate go down. It makes it go higher. But we've already been seeing it. So remember, real estate is a leading indicator of the inflation coming in. It may be a leading indicator of inflation reducing down the road as well. The benefit that real estate has, though, is that as inflation takes full force, as it takes flight, if you will, it should cause interest rates to go higher, which should help mitigate how runaway it is with regards to price of real estate. Similarly, on the way out of inflation, rates should go down to help soften and cushion the downside of a pullback in real estate. So real estate is perfectly poised, structured, and set up to be the best investment during an inflationary cycle. I brought this one up here too. We'll look at a couple other things here in a second. I love the guy's name's Druckenmiller. Druckenmiller. Like, how did your ancestors get that name? So Stanley Druckenmiller, who is investing magnate. Yeah, that's a great way to put it. Just like someone who's made absolute billions of dollars investing. He says that the Fed is endangering the dollar's global reserve status. He actually said some things that were really positive on cryptocurrencies, and that the runaway inflation and the printing of money eventually is going to lead to adoption of other means and methods, which most likely looks like it's going to be Bitcoin. Other options are possible. I think XRP Ripple is also a possibility. Let's look at cryptocurrencies here real quick. And then we're going to check in. So we checked in on oil. So one thing I've told you, Oil. This is the one thing. It's a safe place to be. Several different ways to invest in it. Markets get killed here. Absolute murder. Crypto is also selling off today, except for Ethereum. Ethereum is being purchased by institutional money at a clip like I've never seen before. There is huge money going into Ethereum, which is why it's more than doubled in the last few months here. Glad that I own some of it. XRP, I've had that since 2018. I'm down big time on that one. Bitcoin's still up on that one, but Bitcoin had a tough day today. And it's, cryptos trade 24/7, so keep that in mind. Why am I talking about these? Because I want to show you, look, we're red across the board, except for oil. And what that means usually is that it's a fear-based sell-off or capitulation, you could say. Meaning that it's fear that's running rampant, not fundamentals, not a shift, from this to that, or hey, seems like there's a rotation out of these things into those things. No. Just fear. Just people going, you know what? I'll take my cash for now. And just stepping back. Push the button, sell. Let me get my cash, and then let's see what happens. And that's something that will happen when there's some uncertainty. Because here's the big problem. I'll tell you what the big problem is and why I had 2 rates that I locked today before reprice for the worse. Thank you, Barry Habib, for the warning on that one. It did really help. He issued a lock alert not that long ago, and I really appreciated that one. But the problem is there's more room to run here, especially if this closes below this support level. Guys, we're coming back down to here. Pretty much for sure. And we may revisit these lows here all the way down to here. So, we've got a lot more downside in mortgage bonds without a whole lot of fight probably going to be put up. I mean, I don't see some big buyer other than the Fed coming in there. But the problem with the Fed buying so much in mortgage bonds every day is that it sort of just becomes expected. It's part of the makeup of the thumbprint that is this chart. So, I don't know that it has as much of effect as it would if they did it unannounced or without a plan in place. But you can see this is a lot of downside here. And it's going to be tough. You're going to have now all 3 of these moving averages working against us, all clustered together like this. Just not good. We were so much better off up here, technically speaking. We only pierced the 100-day twice. So we knocked on the door twice and got rejected. Usually 3 or 4 times you get through, like we did with this guy right here. It was like 7 times or 6 times. We just didn't have this. The market didn't have the stamina, and this inflation data is not good. And here's the real big problem: is that the next 2 months it's going to be similar. There's going to be similar bloodbaths. So for the next 2 months, we're going to see this year-over-year issue. Will the market price it in? Probably a little bit more than this time, but the next couple months you very well may see more of this fear, downside. Remember when the Federal Reserve warned us last week about the potential stock market crash? And your boy told you about it, of course, because that's obviously important. I told you to reallocate or maybe look at your investments, talk to your financial advisor, maybe look at rebalancing, maybe look at taking a little off the top. This is why. Some stocks still doing well. Maybe I can show you some of the ones we've been talking about. AT&T today down a couple pennies. Verizon down 7 pennies. Some of these will do better. IBM. These are the ones that I rotated into a few months back. IBM, holding it down a couple percent. Couldn't even avoid it. But now these stocks obviously have dividends. One of the reasons why I am in them. So you see here, Exxon is actually up for the day. Look at that. Oil. And so many people talking about selling Chevron, and they don't want anything to do with Chevron. Y'all are crazy. Crazy. Chevron also up today. So, there's certain things that are going to work. There's certain things that aren't going to work. Is this an opportunity to buy maybe some of these things? Is this an opportunity to buy, some Bitcoin or one of these coins that's getting, nailed a little bit? I'd say so. Is this, a good opportunity to speculate on like tech stocks or, buy Tesla or Amazon? Maybe. But I'll tell you this, and I showed it to you last week. The price to earnings ratio for the S&P 500 right now is 45. Before these last couple of days of sell-off, this is last week, so before these last 3 days, was a 45 PE. which basically is telling you that the entire S&P 500 is a massive growth stock. The problem with that is that while it may be right, while the growth may be coming, it's much easier to push the sell button. So we're going to have higher ups and downs. So we may see, a correction of, let's call it a 5 or 10% correction, which would be totally normal and healthy. And then we may see even more upside from there. It's also possible. But when the Fed issued that warning last week, I knew something was amiss. And that's why I brought it up in the video. And the whole point of making these is not just to be like, look, I'm right. Told you inflation. No, it's to help you make a little bit more calm decisions here than maybe someone who's not paying attention is going to realize this information a week or two from now and go, oh my gosh, what's been going on? I can't believe my 401k is down 25%. I'm not saying that's going to happen, but a lot of times that's how it happens. That's how the panic selling happens, is people don't see it. And then when they finally see it, they go, and then they push the button. So just don't do that. Be smarter than that. Take this information and go figure something out, whether it's with your financial advisor, with your spouse, whatever. Figure out how you want to position yourself. If you've already got real estate, a lot of people right now are investing in their homes, building ADUs. Check out ADU Geeks if you're going to do that. Highly recommend. Let me just pull up their site real quick. ADU Geeks. Kaylani is a United States Marine Corps veteran. He owns this company, and he's like a genius. So he's making some amazing ADU. So a lot of people are doing that. Hey, I'm taking some cash out. I'm going to build an ADU on my property. I totally understand that. You want to invest in the property you already have. Some people who have been unable to purchase in this market because it's been crazy, a little bit cray-cray. Some of those folks have said, you know what? Let's just invest. Let's do a cash out. The market's up. We got equity. Let's go ahead and invest in our own property. Let's build an ADU. Let's add an addition. Let's add a room. Let's add a sunroom. Let's add a bedroom. Let's add a bathroom. Let's, do something to it. Let's invest in the property that we already have. Makes sense. Some people are taking the same idea, same concept, getting the cash and going ahead and investing in properties out of state. Understand that too. But remember, this is a system-wide scenario. The inflation is not quarantined to certain areas. And that is the reason why you're seeing real estate values go up across the country. Doesn't matter where. Because you can't quarantine, you can't control inflation into certain geographies. If it were just, it's a hot real estate market because real estate's hot, then there would be some areas that are doing really poorly and, some areas that are kind of flat and ho-hum and some areas that are doing really well, like in a normal market. It wouldn't be just across the board insanity. That doesn't matter where you're looking. In the city, in the country, doesn't matter. Everywhere it's nuts. That's because of inflation. So what's next? What's next is probably going to be more turmoil in the markets. So have yourself adjusted correctly or accordingly to your risk tolerance and your ability to buy the dip, if you will, or add to your position. Ideally, the best way to invest in anything is to buy it in small doses over and over and over periods of time and dollar cost average, so you don't have to care when it's dipping. When it's dipping, you're like, okay, cool. I'm getting a little price break versus the last time I bought it. That tends to work out. Where do you park money in cash right now? Is that a good place? I've been saying cash is trash for months because unfortunately in an inflationary environment, that's exactly what it means. Michael Saylor, who's one of the smartest people that I know and have ever heard speak, has basically said that he believes the true inflation number is 48%. If he's right, I don't know what to do besides buy Bitcoin. It's the only thing that could save us from that. Gold isn't going to get it done. Real estate isn't going to get it done if that's the real number. He says cost of capital is 48%, which means that if you leave your money in cash, you're basically losing 48% of your purchasing power every year. I don't know if that's true or not. But if he believes it, then it's got to be bigger than what they're telling us. It's not 4%. Okay, it's not. So what are things that have the ability to appreciate like that might be safer investments? Do your own research on that. You've heard my opinions. Do your own research, but just be careful out there. Be careful out there and watch out for fear-based headlines on the way. Okay? Lots of fear-based headlines are going to be circulating some serious fear here in the near future as the powers that be decide which direction to take these things. I have been expecting the stock market to pull back because remember when we did the video, something's got to give? I think it's going to be the stock market. Everything can't go up forever. Everything just can't go up forever. Now, inflation, keep this in mind too. Inflation should be good for stocks for the most part. It should be. For a lot of them anyway. It shouldn't be a bad thing unless it directly affects a business's ability to transact. Meaning, we talked about Heinz ketchup. Remember when we talked about Warren Buffett because he owns Heinz? And they have a lot of different things that go into getting that bottle of ketchup to the shelf at the grocery store for $4. There's a lot of costs involved. And so if you have an uptick of $1 or $2, you're going to see that reflected in the ketchup. The ketchup's going to go from $3.99 to $5.99. Will that affect how much ketchup Heinz sells? There's obviously concern about that. And with certain businesses, it's going to be worse than others. But overall, inflation should be a good thing. It should be something that causes stocks to go higher. And basically, inflation comes in, the trade should be sell bonds, buy stocks. That's what the trade should be. That's the playbook. What you're seeing today is fear. It's not the playbook. It's not a strategy. It's just fear hitting the marketplace. So we'll see how things look tomorrow. Keep an eye on this for you. Right now, as far as interest rates are concerned, still locking rates in the 2s. So it's not like, oh man, rates have gone to 4%. No. I locked 2 rates actually today, 2.75% on VA loans with lender credit. So it's not bad. It's not bad, but it doesn't look good for things to get better. Not at the moment. It looks like we're going to see worse interest rates. So right now, I would say if you get into escrow, try to immediately look at locking. Today I beat the reprice just barely with a couple of deals. Just try to look at locking quickly. We'll see if this thing turns around. Look, we still got a couple days left in this business week. And, it's totally and entirely possible that this could rebound a little bit, even if it just kind of goes sideways, go over here, over there. The stability will help pricing. Okay. The stability will help pricing because remember, rates go up much faster than they go down. Because if we saw a big spike, let's say we saw a huge candle over here, for mortgage bonds, and you go, oh man, this means rates are going to drop huge. They will drop, but they're not going to give you that whole thing all at once. The banks won't. No, they'll wait and see because the next day it might drop down to here, and the next day it might drop down to here, and now they're holding the bag, with these locks that they've commitments that they've made up here. So they will kind of go, okay, well, we're not going to give you all that, but we'll give you up to here. And then if it stays and kind of goes sideways from there, then you'll start to see them ratchet up as time goes on. Oh, man. I guess we're done with this chart, whatever that was. So they'll kind of, ease into it. So expect that to happen. Expect to be a little bit uncertain here in the coming days. Expect some fearful headlines. They're going to, the media makes a lot of money off of scaring the shit out of people. Trust me, I was in the business for a long time. I've seen some horrible things. I've sat at some executive round tables for major media corporations where I don't even want to talk about it. Disgusting. Fucking disgusting. So trust me, they want you scared. It causes you to come back to them for more, and they make a tremendous amount of money off that. So you're going to see a lot of that now that the opportunity has presented itself. Try not to pay too much attention to that. Try to sit back and look at things from a more zoomed out perspective and just know, hey, what's going to work if we have rampant inflation for the next 4 years, 3 to 4 years at least? How does that look? What are you going to do? Where are you going to put your cash? And this is one of the reasons a lot of people have been buying real estate. Why real estate's so hard to come across? Should you buy land? Maybe. But I do think one thing. Look at real estate. If you're more conservative, look at that. If you're more aggressive, do some investigating and some research into crypto, particularly Bitcoin. Okay. And if you are looking for different things that are going to work, Oil, there's a bunch of oil ETFs. You can just buy ExxonMobil or whatever if you want. Pretty much tracks the price of oil, basically. You can also buy the USO. There's other different oil stuff. Don't buy any of the leveraged stuff, as the 3 times oil, bullish thing. Don't buy any of that crap. The decay in there is increases the risk so much that it's not worth it. Okay, trust me on that. Done that math. Oh, look at this. So, quick links. Gas prices soar. Ellen's show ends. Unstoppable inflation. Worst kind of debt. Unstoppable inflation. What happens when we click on unstoppable inflation? Thomas Peterfy says he's worried inflation in the U.S. could become an unstoppable situation. This is what I was telling you. This is not just normal tick-up inflation. This is extreme hyperinflation, which will begin to have its own momentum. This is what he told CNBC. Whenever I hear numbers like this, I look back to my childhood growing up in Hungary. This guy is a Hungarian-born Wall Street pioneer. He's reacting to this information that we're talking about today. He says, I'm very worried this is an unstoppable situation because the longer the Fed waits, the more they will have to raise the rates. But what he's saying is, basically, the Fed can stop this. But it's a snowball going down a mountain of snow. So they need to get in there immediately. Remember Janet Yellen last week, she said, might have to raise rates. She was right. It's the only way you can stop it. But even if they raised rates 1%, would that be enough to stop this avalanche? I don't think so. I think they need to come in immediately with 2 or 3%, and that's the only hope. And even then, we don't know if that's enough. So he's worried about unstoppable situation. So am I. That's why I'm telling you. If you buy into the fear and you go put all of your money in cash, you're going to be right where they want you, in the bank, counting on your FDIC insurance, which is so underfunded, it's crazy. In the case of things going really bad, that's not going to be the place to be. Cash is not going to be the place to be. It's tough. It's tough to swallow the pill that, I've got to deploy my cash somewhere. Lots of different ways to invest in real estate. I would recommend that. Invest in crypto, research that, look at Bitcoin, try to understand it first. I never invested in Bitcoin until I could understand it. People ask me on my show for years, hey, what's Bitcoin? How does it work? Will you cover this? Will you do a segment on this? Will you interview someone? I'm like, listen, I don't understand it. So if you want to invest in it because you understand it, go for it. I don't understand it, so I can't invest in it. As soon as I understood it, I immediately started backing up the truck. I started pulling the trigger on a daily basis. Pretty much haven't stopped because I actually understand what it is. If you don't, then don't invest in it. But take a look at these things and just know that this is the very beginning of what's going on here with inflation. This is the very beginning of it. So, in fact, I had a buddy of mine who sold a car recently that had gone up in value, a used car. You want a perfect example of what inflation looks like? His used car with almost 100,000 miles on it had gone up in value since he purchased it. Crazy. This is inflation. Demand comes in, and you're going to see this start to eat itself too. Remember the toilet paper incident, the toilet paper situation during the pandemic? It's something that feeds itself. People hear, oh, you can't get toilet paper anywhere, then I need to go buy as much toilet paper as I can, way more than I normally would. It's something that feeds itself. This is happening with real estate. This is happening with cars. It's happening with a number of things. So be careful and try to be wise. Heed these warnings. Take a look at your situation. See what you can do to improve it. And of course, as always, we're doing everything we can here at the VA Dream Team to help veterans buy a home, refi, save money ultimately on their real estate. And while real estate, I think, is the number one solution for this situation, it may not be for everyone. But if you want to find out how much home you can buy, how much cash out you can get to add an ADU, anything like that, give me a call, shoot me a text, send me an email. Happy to help any way that I can. We don't just do VA loans, but we do focus on that. So if you know a veteran who's looking to buy or refi, have them get in touch with me. I appreciate your time. I really hope this helps. I really, really do. Have a great day, team, and I'll be in touch soon.